Should you buy Microsoft stock? Ticker symbol MSFT. Microsoft just reported second quarter earnings. Revenue increased 2% to $52.7 billion and net income decreased 12% to $16.4 billion year over year. Based on the latest share price, Microsoft has a market cap of $1.8 trillion. With $100 billion of cash and $44 billion of long-term debt, the enterprise value is roughly $1.74 trillion. Revenue over the last 12 months is $204 billion, with net income of $67 billion and $9 earnings per share. That gives the company an expensive valuation of 8.5 times revenue, or 27 times earnings. Historical revenue growth, meanwhile, is clocking 11% over the past 10 years, and EPS growth is roughly 18%. Breaking out the earnings report, you can see that the real bright spot is Microsoft Cloud. Cloud revenue was up 22% to $27 billion, meaning cloud run rate revenues are now over $100 billion. So cloud is now the most important part of Microsoft's business. But again, we are seeing deceleration in some areas. And here's an interesting chart which shows how slowing growth has been gradually spreading across segments over the last few quarters. None of this is surprising. Of course, Microsoft is exposed to higher operating costs like almost everyone else, so it's going to face the same pressures. On the plus side, the company has a staggering amount of cash, and it's invested at least $10 billion into OpenAI, the company behind ChatGPT. This is no doubt a smart move and could help the business gain market share in areas such as online search and in cloud computing. But trading at the multiple of 8 times revenue and 27 times earnings, Microsoft is already pricing in a significant amount of growth. Let's assume with the help of buybacks, Microsoft can grow earnings per share at 15% per year for the next 10 years, slightly lower than the historical average. Then assume the stock trades at 25 times those earnings at the end of those 10 years. The company would be worth a whopping $6.7 trillion in 10 years' time. Including dividends, that works out to an investment return of 14.8% per year. That's a good return, but there's not much margin for error, and Microsoft's size could make it hard to hit those numbers. So I'm going to give the company a neutral rating as it looks pretty fairly valued. But these are my personal opinions, not financial advice, and I've got no position in Microsoft stock.